Hey, good morning, everyone. So, thanks for taking time on a weekend to join the webinar, where we'll discuss on how we can consistently make gains with stocks trading or options trading with a low risk strategy. So, again, how to find which stocks to buy or which options to buy. There are different tools, different indicators which will help us to uh, tell us like, okay, which are the good stocks, right? For example, right, let us say I have a scanner which will scan all the NASDAQ stocks, all the QQQ stocks. So, for example, Amazon, everything is red. That means it is in a downtrend. If I look at DDOG, everything is green. That means it is in a uptrend. Or let us take example of Google. It is everything is green. That means it is a bullish. It is in a bullish stock. It is in a bullish trend, right? Or MAR 10, 15, 30, everything is green. 5 is so I can use, right? Google looks a good opportunity, or DDOG looks like a good opportunity, right? So that is one way. You can we can use multiple scanners. Uh, so, for example, I want to look at some of the downtrend stocks. I can go select options downtrend. For example, EEP. You see 5 minutes, 10 minutes, 15, all these different time frames. It is bearish. So that means it is in a downtrend. Or TMUS. It is in a downtrend. It can go further down. So like that. So if something is green and something is red, we can ignore it. If something is completely red, that is a good one. Whenever the turns all red, that is a good one to buy, right? You can short the stocks, you can buy the puts. Or, right, this is one way we can do in Think or Swim or, right, now Charles Schwab platform. We can use different scanners. Those scanners will tell, right? Again, you can use the scanners for options, stocks, futures, whichever you want, right? For example, I want to look for which futures are in a downtrend. As of now, there are no specific symbols in downtrend. If I, okay, yeah, now it is showing like, okay, EMD is in a downtrend or MNQ is in a downtrend. So if I go and click on MNQ, 5, 10, 15, everything is red. If 30 also becomes red, there can be a lot more bigger drop on MNQ tomorrow. Or YM, right? 5, 10, 15, 30, everything is in downtrend. So whenever all this turn to red, you can immediately short it. You will make nice profits. NQ, NKD, RTY, YM, we know Friday there was a huge drop. Everything dropped so much. So still, yeah, they can drop further. So we can use these scanners to identify which ones are bearish, which ones are bullish. Right? This is one way. Or, as most of you know, right, as I shared yesterday also, let me share you, right? There are some other different ways, right? For example, by looking at this chart, right? I'm looking at AMD chart. What do you think? AMD, whether it will go up or go down tomorrow, right? We are looking at a 1 hour chart. We can look at 5 minutes or 1 hour, 30 minutes. If you are a day trader, scalper, you can look at smaller time frames. You are more of a swing trader, right? You want to take a trade in first 1 hour and then take profits on the next day. You don't want to look at the chart for throughout the day. Then you can look at higher time frames. So by looking at this, right? So generally you have something called as a discount area, equilibrium area, and the premium area. Premium area is like where your stock is expensive. Equilibrium area is where it is neither expensive nor cheap. Whereas discount area is where the stock is cheap. So what do you think can happen to AMD stock tomorrow by looking at the chart? Right? There is very high possibility. Because now here we are looking at two different indicators. One is this one went all the way from top to the bottom, right? Bottom to the top, right? This means this is the oversold area. This is the overbought area. That means AMD from nearly $150, it went all the way to 156 or 159. Now again, because it is overbought, now again it is dropping. So yeah, most of you answered it right. There is a high possibility for a drop, right? Let us take one more example, PDD. So what do you think PDD can happen tomorrow, right? It came all the way to the bottom. Now it started going up. So it is now in a discount area where some big companies are making some big purchase, right? They are buying a lot of stocks. You can see if you see something in green, 204.70, right? Lot of buy orders here. So what do you think PDD can happen? Do you think it will further go down or it can go up? So there is, yeah, high possibility for stock to move up, right? Because it is already oversold, right? Now, 90% of the time stocks will not keep going down or stocks will not keep going up. They will go up, come down, again go up, again come down. So it will be like a cycle. Minimum it may go till 120, $130, right? Maybe tomorrow, day after tomorrow, we may see PDD going to $130. So what are the ways you can make money now, right? Now we know AMD is bearish, PDD is bullish. So in trading, you can make money in different ways, right? Let me open a Word document, right? I'll explain using some examples so you will understand. So let us say PDD is bullish, right? If somebody is new, what do you mean by bullish? Basically, if you think stock is at a lower price, if you think it will go up, that means you are bullish. If you think some stock is already at a higher price, it will go down. That means you are bearish about the stock, right? So if you think this RTY will go down, or you think, uh, let us say you think Dash will go up, that means it is bullish. Everything green, that means you are bullish. Yeah, it is neither bullish nor bearish. It is both up and down. Or let us take Google example. It is completely bullish. So you are bullish about the stock. So whichever, right, you can use trading view indicators, you can use think or swim indicators, whatever indicator it is. First thing is you have to identify whether it is a bullish or bearish, right? In this example, let us take AMD is bearish. That means higher chances to go down. PDD is bullish means higher chance to go up. So nearly you have 90% chance for stock to. So trading is all about probabilities. So now there are, right, trading, you can buy low and sell high when you are bullish about an instrument. Or, right, many people think like, oh, only if market is in a uptrend we can make money. But there is one more way you can do, even though you don't have AMD stocks in your account, but if you have sufficient value in your account, you can sell high and then buy low when price goes down. So either you can make money when the stock is when that instrument is in an uptrend. You can sell something and then later whenever it goes down you can buy back. Right? It is like you are borrowing from the brokerage. You are telling that okay, give me this AMD stocks. You will sell it, right? For example, now it is approximately at $156. Right? Where it can come, right? Where is the high possibility? Again, when the big players are buying around 152.5. You are selling here, and whenever it comes here, you can buy back, right? Because that is where it will come and then again start moving up. So you can make money by buying low and selling high. Or you can also make money by selling high and buying low. For example, let us say you have a $25,000 account or $10,000 account or $30,000 account. Now let us talk about stocks trading, right? Which is a low risk stocks trading. What you can do in this situation, you see that oh, big companies are buying, right? They can move the markets. They have higher potential to move the markets. Uh, so they will try to, if all the big companies like all these banks, insurance companies are buying stocks, that means there is a high possibility for stock to go up. Or if all those companies are selling, right? For example, Nvidia. What the big companies are doing, if you see $5.39 million sell orders, right? They are trying to sell the stock. At the bottom, they will try to buy. At the top, they will try to sell. So it may come all the way back to 138.5 and then it may go up, right? It went all the way to the premium. Coming down, it will come to the bottom discount area and again it will go up. So you are bearish about Nvidia, AMD, multiple chip stocks. So Nvidia, AMD, all these are bearish. So you can make money now. For example, you are bullish about PDD. You can buy 10 stocks of PDD, right? Because you have a 10,000 account or 25,000 account, you will buy some 10 stocks. If you have a bigger account, you can buy more stocks. Where do you think PDD can go before it again reverses? What do you think? What is the possible targets? Right? If you look at the picture, there are a lot of big companies are buying here. You are at a bottom discount zone. Where do you think PDD can go from here? And what is the possible target? Right? Approximately, it may go all the way to $130, right? Because that is where again you have a lot of sell orders, right? The price always will try to go to the liquid zones, liquidity zones, right? Where there are a lot of orders. Your retail traders may do for one contract, two contracts, five stocks, 10 stocks, but big companies will do thousands of stocks because they have a lot of money. So it will always try to come grab this liquid zone. Again, it will go, it may try to catch this zone. So there is a high possibility to go till 130, right? Either tomorrow, day after tomorrow, we may see PDD at $130. So you are buying 10 stocks. So what is your investment? 122 into 10. Approximately your investment is $1,220. Then you are selling at 130. That means 130 into 10, which is $1,300. So what is your profit? Approximately your profit is on each stock, you are making $8 profit. So that is $80. So what is your investment? You are investing $1,220. On $1,220, you are making a profit of $80. It may happen tomorrow, day after 3, 4 days. Whenever it happens, there is very high possibility, 90% possibility because big companies are buying. It already went so much, it came down, trying to reverse. It already did a double bottom. There are a lot of buy order. Whenever price touches it here, immediately it will bounce. And if there are more buyers, they will try to take it up all the way to 130. So 90% possibility it will move up. But if you buy stocks, the problem is you are investing so much money. So if you look at returns, return of investment, right? 80 divided by 1220 is like your maybe 0.06%. That is what you are making. So the other way to do is instead of buying stocks, you can buy something called as you can do options. What do you mean by options? You are not really buying a stock. You are not really holding a stock, but instead of buying a stock, what you are doing, you are buying a contract, right? What do you mean by a contract? Basically, an option contract. Uh, right? What we discussed till now, stocks, a form of security where you have ownership in the company. If you are buying some 100 stocks of PDD, that means you are a small shareholder of that company. But the problem with stocks is you need lot of money and your return of investment is minimal. You have low risk because there is no time decay, there is nothing. Right? Even though it may go down tomorrow, maybe Tuesday it will come up. Even if they go down a Tuesday, maybe on Wednesday, Thursday, if you wait with patience, if it is a good stock, right? The PTT is a nice stock. It moved to from $90, it went to $150 last week. Again, because of some reasons, it dropped, but again, it may go to 130, 140 again. So it is a good company stock. You are not buying some unknown company, penny stock. So the advantage with stocks is you have low risk, but low returns, low ROI. Then you can do options where you can buy a stock at a specified price by a specific time. That means you are getting into a contract. Really, you are not buying the stock. You are you are just entering into a contract to buy, right? For example, let us say you are buying PDD options contract to buy PDD at $122. So you may not have a lot of money to buy 10 stocks, 100 stocks. So instead of getting into stocks trading, you can do options trading now. So what will be your investment, right? For example, let me go to trade PDD. I want to, for example, tomorrow morning, I want to buy a call option for 1st November. If I want to buy a call option, right? On this side you have calls, on this side you have puts. Whenever you are bullish, you will buy something called as calls. Whenever you are bearish, you will buy puts, right? So just like here, whenever you are bullish, you will go long on the stock. Whenever you are bearish, you will go short on the stock. Generally, shorting is little risky because you have unlimited risk. So most of the traders, right, when you are doing stocks trading, it is always better you do long. But when you are doing options, you can either do long or you can also do short. So whenever you are bullish, you will buy call contracts or call agreements. Whenever you are bearish, you will buy put contracts, right? For example, for AMD, NVIDIA, or SOXL, all these are bearish. I can buy the put contracts. For PDD, XOM, Valero, USO, Shell, right? Lot of oil and gas companies. I want to buy calls now, right? In the current scenario, right? For example, tomorrow morning, because I am bullish about all these stocks, right? I'll show you why, but I am bullish. So whenever you want to buy this, here whatever premium you see, that is for one stock, right? It is not that you are just paying for one stock, you cannot buy a agreement. You have to buy an agreement. So you don't want to invest a lot of money, but you think this may go up to 127, 128 or something by tomorrow, day after tomorrow. So you may want to buy, let us say, 122 call tomorrow morning. So this is like a bid, this is like ask. That means somebody want to buy at 3.10, but somebody who is already holding that contract, that agreement, he is telling that I want to sell at 3.25. So for whatever you see here, the price that is for one stock. That means one stock. So to buy PDD stock at 122 before. So what is the date here? Expiry date 1st November. You don't need to have all the $20 tomorrow itself. Even if you have, so you are getting into a contract. I want to buy PDD stock at 122 before November 1st, any point of time, right? Until November 1st, you have a right to buy the stock at $122 price, right? I hope you are getting it, right? You don't have a lot of money now, but you are bullish about the stock. So instead of investing a lot of money, you want to invest in a option contract. You are getting into a contract asking him that I want to buy PDD stock at $122 price, right? This is where you will see what is the strike price. $122. This is the premium. I am ready to pay you this, maybe, right, somewhere in between. You are telling that I will pay 310. He is telling give me 3.25. That is for one stock, but you generally have to multiply it with 100. If you want to get into one contract, multiply this with 100. That will become, that means before November 1st, and I am ready to pay $320 as my premium. Right? For example, you want to buy a new home in Hyderabad, or you want to buy a home in Dallas, right? They are starting a new apartment or something. You will go and give them a 50,000 or 1 lakh or 10 lakhs as advance. And then, even though the value of that home today may be 600K, but by the time they complete the construction, it may be $1 million. You are locking your price by paying in advance, by paying a premium. For example, tomorrow you cannot get a loan or something, that advance will be lost. In the same way, because you are bullish that stock will go up, you are telling him that, okay, I want to pay this $320 premium, and I want to get into a contract so that you will give me that stock at $122. Whether it goes to 130, 125, 140, whatever it is, you have to sell me at $122. That is what you are getting into an agreement by paying that premium, right? When you are basically buying a call. So because that person, whoever is selling, he may think that, oh, there is a lot of war is going on in Iraq, Iran and Iraq. All the stocks may go down. Let me collect the premium, right? He is selling a call by collecting this premium. You are buying the call by paying the premium. So you are a buyer and he is a seller, right? Again, it might be some other trader. Basically, this brokerage platform is like Amazon marketplace, where all the people, right? Amazon is not manufacturing the products. In the same way, Thinkorswim is not selling all these contracts. It is just a marketplace where buyers, I may buy it, somebody from my neighborhood may sell it. So I am paying because I am bullish about a stock. Is that clear for everyone until now? Okay, cool. So now let us say tomorrow the stock value after 2 3 hours, stock goes to $125, right? Because there are a lot of right, some JP Morgan or Bank of America, they kept their buy orders. So whenever price comes and touch this, immediately you will see. a big spike. Then when some other companies will see, oh, right, this Bank of America is buying, JP Morgan is buying, then there might be some more companies will buy. It will, right? They may put another 100K, another 100K. It may go all the way till here. So then what will happen to your stock, right? Your if it goes to $125, then maybe your whatever 320 or 3.2 premium you paid, that may become 5.5 or $6, $7, right? As the stock goes up, your contract value goes up, right? It is like you are paying in advance. Suddenly, some Amazon, Tesla is starting a company, yeah, in that location. Suddenly, your land value or your apartment value will go up so much, right? You don't need to hold until last minute. You can, whenever now, you can sell your agreement to somebody else with a higher profit. The same way as the stock keeps going up, you can sell your agreement to somebody. So that is one way you can make money in stocks, right? Or let us take example of AMD. So again, if you see AMD, what do you think can happen to AMD, right? Up to what price it may come? It went all the way from the bottom to the top, right? Up to what price you think the market makers will try to bring it down? Right, minimum 152, because that is where again there are a lot of buy orders. So from the red zone, they will try to bring it to the green zone. So 152 is possible. So what I will do, if I go to AMD tomorrow morning, whenever I think it is a good time, I can buy a 155 put, or I can buy a 152.5 put, because you are bearish about the stock. If you are bullish, you will buy this side. If you are bearish, you will buy on this side. Right? For example, you buy 152.5 put. Immediately, as soon as stocks start dropping, this $425 will become 500, 600, 700, like that. It will keep on going up. So that's what are called as your. But if your stock, let us say because of some reason, if your stock goes in the other way, you thought AMD will drop, there is a 90% probability AMD will drop, but there is a 10% risk. Suddenly tomorrow you may get a news that AMD got some right, for China is allowing AMD, or some big company is ready to buy AMD chips or something, right? There is a 5%, 10% probability that it may go up. So then what will happen to your premium, right? Let us say for AMD, what is the AMD 155? That means approximately $545, something in between bid and ask. So you can just think like an insurance company. So even AMD goes to $100 also, they have to buy the stock at 155 from you. You are paying them a premium. You are paying, for example, for a insurance company, you are paying $100, $200, so that your Tesla or your Toyota or Honda is protected. Even though if by any chance if you get into accident, they have to replace that car, right? They have to fix that car with all the repairs, even though you are paying 100, $200. In the same way, when you are buying a put, it is just like taking insurance on your stocks. Or again, you don't need to hold the stocks. If you want to buy put on AMD, it doesn't mean you have to have AMD in your account. Even though you don't have AMD in your account, you are bearish about Nvidia. You are bearish about PDD, or you are bearish about, oh sorry, not PDD. Nvidia, AMD, SOXL, different things, you are bearish. And because you are bearish, you are looking at different indicators, or you are looking there are a lot of sell orders. You are confident that there is a 90% probability that AMD will drop. And when AMD drops, your put contract value will keep going up, right? As of now, it is at 156. If it goes to 155, your 545 will become 700. If it goes to 153, it will become 800, 900. Your 500 will become $1,000 if it reaches. Whenever it is coming close to here, you can make profits, right? Just close the contract, sell it. Then, because somebody else might think, oh, it will go all the way here. There are a lot of buy orders here. So it is up to you, right? If you want to take more risk, you take some 80% profit here and wait for some more profit. If it breaks this, right, this is like a support. This is like a strong support. So either it may reverse here, or if there are a lot of sellers, if the war continues, then it may come all the way to 149 also. Then your $540 contract value will become 1,000, $2,000. You may make 200, 300%. So like that, you can buy a contract, buy a put contract when you think something will go down, or you can buy a call contract, something will go up, right? When war situation is going on, then you have some war related stocks like LMT. LMT is a company which manufactures all these war products. So what do you think, right? It came all the way from the top to the bottom. So now where is this? It is at a discount zone. Trend is completely bullish. RSI is completely bullish on all different time frames. So tomorrow we may see that, right? There is a small sell order here. But if it breaks here, it may go all the way from 565 to nearly $580, right? Because war is going on in Iran and Iraq. If there is war, these companies will make a lot of profits because people, right? Those countries will buy all those war related equipment from these companies, right? Or KTOS, that is another company. So like this, but right, you are getting the concept. When something is at a bottom, you can buy calls. When you are something at a top, you can buy puts. Right? That is for easy understanding. But what, right? If stock, let us go to PDD example again. Stock came all the way down, and now it is in a small range, in a consolidation zone. Right? Again, it is still red. Right? Maybe tomorrow it will come touch this, and then slowly all this will become green. At that time, we'll buy the calls. But let us say because of the war situation, all those things, traders don't want to take risk, right? There might be some buyers who want to buy. Again, some sellers are thinking because of war, it will go down. Some buyers are thinking, oh, there are a lot of buy orders, let me buy, it will go up. So sellers are selling, buyers are buying, sellers are selling. So it will be in a small consolidation range, or it will be in a choppy zone. Just like, right, from 24th, it came to the discount, but buyers are trying to take it up, sellers are bringing it down. Buyers are trying to take it up, sellers are bringing it down. If it continues for another 2 3 days, what will happen at that point? You paid a premium, right? You are paying some. You are paying how much you are paying? Nearly $320 as the premium to buy 100 stocks. To buy PDD 100 stocks at 122 before November 1st. I am ready to pay 320 as my premium. But if stock goes up, you will make nice gains. If it goes up on 1028 itself, you may make 100% to 200%. If it goes up on 1029, right, to $130 or $125, you may make 100%. If it goes up on 10:30, right? For next 2 days it is choppy, then it started moving up because next 2 days still war is going on. Buyers are not ready to take any risk. If, let us say it goes on level one, but it's only going to $123. How much you paid? 320, right? To buy the stock at 122, you are buying 320, but the stock only moved to 123. That means your cost is 122 plus 320, that is 125, 125.2. But the stock is only staying at 123 or something, then all your money is lost. In the same way, put contract you bought it, let us say it is just staying at that 155 range. It is not going up, going down. So as a buyer, if you are buying a call, your stock should immediately start moving up. As soon as if it moves up, you will be in much bigger profits. If you buy a put, it should start dropping quickly, right? Because when you are paying a premium, there is a component called as time decay, theta decay, or time value. Based on how much time you left for your contract expiry, you will get more and more, right? Because, for example, tomorrow you are buying a Friday contract. That means you have another 5 days for the expiry. Tomorrow itself, it started moving. That means there is 4 more days where it may go to 130, 140, 150 also. So your value of contract will keep going up very quickly. But if it is just staying choppy here, then your contract will keep losing value. So if you are a buyer of a call, only if the price goes up quickly, you will make money, right? Even though it may go up, but until next 3 4 days it is just staying here, or after 4 days it is going up, then you may not really make much profits because you are already paying $3.2 for each stock as a premium, as your advance amount, as a guarantee amount. So if it goes only above 125.2, then only you are at a profit. But if it goes to 123, 124 by Friday, you are at a loss because for 122 stock, you are getting into an agreement for $122 price by paying $3.2 for each stock. That means you will lose your money. So what is your risk? If stock moves, you will make a lot of money. If stock doesn't move, your risk is that $320 what you paid, you will lose that. What is the possibility? If it moves, you will make money. Let us say you are a seller of a call, right? Let us say, or right here, whenever you are a bullish, you can also do one more thing, right? When you are bullish, right? Stock market is all about you can be a buyer, you can be a seller. You can buy calls or you can sell puts. You can also sell puts at this point. When you are bullish about something, you can be that insurance company. You can collect the insurance, right? For example, right? Scenario one, you bought calls, 122 calls by paying 3.2 as premium. So your break even to make gains is 125.2. Only if stock goes up above 125.2, you will make profits. If it goes immediately to 130 tomorrow, you may make 300, 400% profit. If you sell the put, right now you are selling a put because you think like it will go up, right? When you are bearish, you will buy the puts or you can sell the calls. When you are bullish, you can buy the call, you can sell the put. When you are selling a put, right? For example, you are selling the same 122 put. So you can buy 122 call or you can sell 122 put. If you sell the 122 put, so how much you are receiving now? How much money you will receive as the premium? So instead of you buying 3.2, again, if you go here, you see, okay, PDD 122 put, you are collecting nearly $255, right? 2.5, 2.6, approximately in between is 255. So you are collecting 2.55 as premium. So if stock, so to make money here, only way to make money is stock should go up quickly and quickly, or should be above 125.2 before November 1st, right? If it goes tomorrow itself, if it goes to 122 to 123 also, you'll make profit, right? Or if it goes to 124, you bought at 122, it immediately going to 122.5, you'll make. Or if it is very slowly moving, then minimum it should go above 125.2 before first, then only you will make profit. But if you sell the put, you are collecting premium. Now you are like an insurance company because you are bullish about the stock, but somebody is bearish. Somebody is thinking because of war or something, it may go further down. So they are buying a put. You are selling the put. You are collecting the 2.55 premium. So now, if stock goes up above 122, you will make money. If stock stays at same price, you will make money. If stock stays, so because you are collecting 2.55, that means your break even is 122 minus 2.5, which is because you already took the money from them, 119.5. If stock stays above 119.5 before November 1st, you will make money, right? So if it goes up, you will make money, right? It is like you sold an insurance, nothing happened to him. All the money you are paying for your car insurance, the insurance company is keeping it. Or the stock is just chopping, right? Because of war situation or something, it is just staying here, chopping. Then you will make money. Stock goes little bit down from 122, it is going to 120, 121. Still you will make money because you collected the premium. So when you are buyer of a call, only if it goes up, you will make money. When you are seller of a put, right? When you are bullish, if it goes up, you will make lot of money, right? All this premium for if you sell 10 contracts, you will make $2,550 as profit. Even if it stays at same price, you will make money, right? Because they don't need to buy from you. If the stock is staying at 122, they already paid $255 as premium to you. All that premium will be yours because the time is helping you here. All right. If there is lot of time decay, that is because you are a seller, that will help you. And if stock stays as long as it is above 119.5 before November 1st, you will make money. So which one you think has more probability where you can be a winner, right? Where you can make money. Do you think as a buyer you will make money or as a seller you will make more money? Right? I want to keep it simple, right? Some people may not understand the graphs and all those things. So just I want to keep it simple so anybody can easily understand, right? Here, one out of four possibilities you will make money. Here, three out of four possibilities you will make money, right? As a seller, right? When you are buying an insurance for your car, do you think insurance companies are profitable or you are profitable? Right? Insurance companies are collecting premiums from thousands or millions of people, right? At the end, who will be profitable? Right? It is good that you are mitigating the risk. You are buying insurance so that suddenly if something happens, right? Whether you buy life insurance, health insurance, car insurance, whatever it is, you have a 1 out of 100 chance that something may happen, but you are mitigating, which is good, right? I am not against insurance, but in a long run, out of 100 people, one may get into accident. So the company is using some maybe 50% premium and replacing his car. The other 50% money, insurance, right, company is keeping. Stock market also, nearly 40% of the time, market will be in a trend. 60% of the time, it will be in a range market, right? Range market or sideways market. That means it will be chopping. So 40%, it may go big uptrend, big downtrend. 60% of the time, it will be just moving up and down, where your premiums will be lost. So most of the retail traders, they will be doing this one. Big companies, they will do this one. But you may ask, right? Suddenly there is some bad news tomorrow, right? About some China. Suddenly there is a war on China or something. Again, you have 90% probability you will make profits. It will go up. But there is a 10% possibility it may go down. And what is your risk, right? If you are buying a call or right, if you are buying a call, only $350 is your risk, right? Or your whatever premium you are paying, right? You paid $320. Suddenly stock is not going up, just staying choppy or going down. Maximum risk for you is 320. Now you are selling a put and suddenly stock may go to $115 or $110 or right here you have a big buy order block. If it goes to 110 or if it goes to $98 or it may go to $90, right? Suddenly there is a war from some other country to China. Then you have a unlimited risk. You don't know what is your risk, right? Even though there is a high possibility, probability for you to make money, there are different ways you can make money. Whether it is choppy, you will make money. Whether it is sideways, you will make money. If it goes up, you will make money. If it goes little bit down, you will make money. But there is a 5%, 10% chance or risk where it can suddenly drop, right? The probability is very less. But do you want to take that risk, right? Because if you sell the put, that means you are entering into a contract that whatever is PDD price, I will buy stock at 122 from you. You are collecting the insurance and you are telling him that I will buy it at $122 because now you are paying me $250 as a premium. I am giving you an assurance that I will buy at $122 from you. If suddenly if it goes to 108, you are at a risk. Or if it drops further, you are at much bigger risk. If it drops much further, you have unlimited risk when you sell the puts or sell the calls. You have high chance of success, but you have also high risk. So that's why what we do something called as a bull put, right? What is a bull put? Bull put strategy. You are primarily a seller because you have more chances of success, right? Higher probability to make money. Then you are also a buyer to mitigate any sudden risk. So now what I'll do, I will, I know by selling a put, I have more success. So I'll sell 122 put. But if suddenly if it goes down, I have high risk. So what I'm doing, I'll also buy maybe 120 put or 119 put. So what will happen that with if I am selling, if you go here, If you sell 122 put, you are collecting $250. If you buy, you are paying $135. So what is the overall? You have a credit of, you are selling and collecting 255. 255 minus, so collect 255 by selling 122 put and pay 125 to buy 119 put. So what is your overall credit is approximately $130, right? You are collecting as an insurance company. So instead of just selling, right? One way is you can buy the calls, you can make money, but if stock stays choppy, you will lose. The other way is you can sell the puts. If stock goes up, you'll make money. If it stays choppy, you'll make money. If it goes little bit down, you'll make money. But in case there is a 10% risk, suddenly because of any bad news, market can go very much down. So instead of just like being a buyer, just being a seller, what you are doing, you are playing both the roles. You are basically a primary seller. And also you want to reduce the risk. You don't want unlimited risk on your side. You are also buying a put. So you will always sell a higher strike put and you will buy a lower strike put and you are collecting premium. So now if stock goes up, you will make money. If it stays choppy, you will make money. If it goes down, you will make money. If it goes less than 119, also your risk is limited, right? You may have small loss because, right, if you are just selling a put, if it goes down, you have a huge risk, right? You are selling a naked put. But now we know that you are at a bottom. There are a lot of big companies are buying. It already got from premium, it came to the discount area. So you selling and also you are buying. So now your risk is minimal, right? So 95% of chance you will make profit. If you just buy the call, maybe 60% you may make profit. For AMD, if you buy the put, 60% of time uh, you may make profit. But when you do a bull put spread, you have 90% chance to make profit. So which one do you think is better? Do you want to make more profits 60% of the time? Or even the profits are limited, you want to make profits 90% of the time. Which one is low risk and which one do you think? So bull put means it is a credit spread, right? We generally, what you do, you can go here, right? You can click on buy vertical, right? When you do buy vertical, you are basically, you are selling a higher strike and buying a lower strike, right? So now you are collecting $120 as a credit. So as long as stock stays between 119 and 122 by next Friday, if it goes above 122, all this money is completely yours, whatever you collected. If it stays at 122, all this money is yours. If it stays at even 121, you are at a profit. Only if it goes below 119, your risk is also limited, right? Because you also bought a put. So this will protect you as a hedge, right? Otherwise, you have unlimited risk. But now you are selling a put, you are also buying a put. That is how you can make 90% of the time you can make profit. So all we need to do is identify which stocks are close to a bottom, which stocks there is a big buy order block. Now, if you do a bull put spread, you will 90% of the time you will make profits, right? There is a 10% risk, but you are mitigating that risk by buying another put at the bottom. So suddenly, because of some reason, even if it goes down, maybe again it may come little bit down and start going up. So your risk is minimal. Here you may have a higher chance of profit when you buy calls, but if market stays choppy or if it goes up and down, there is a lot of volatility or there is a lot of market situation because of war, because of recession, because of elections, whatever reason, if stock is not directly going up, Then there can, if you see $1 million, $2 million, then yeah, maybe you can buy calls, or you collect some credit, use some of the money to buy one or two calls. So if it goes up, you'll make money. If it stays choppy, also you'll make money, right? Same example, right? Now let us take AMD. Right? Very high possibility because it went all the way from bottom to the top. It went all the way from bottom to the top. Very high chance of it dropping to 152. So one thing I can do is AMD, I can buy 155 put. But you are investing a lot of money, $545 for one contract. The other thing what I can do, I can, instead of buying a put, I can sell the call. Right? I am collecting $685. But what I can do, I can also, right, buy vertical. You always buy, or you always sell a higher, right, a lower strike, right? For puts, it is reverse. Always you have to sell a higher strike put, buy a lower strike put. Whereas for calls, what you will do, you will always sell a lower, right? The price is lower here, lower number, 155 call, and you are buying a 157, right? Always it should be credit, right? Whether you are doing a bull put spread or a bear call spread, you are always collecting money, right? You are like an insurance company. You want to be on a profitable side. Insurance companies or casinos, they have more chance to make money, right? You are collecting the money. There might be one, two out of 100 who will make money in a casino. There are one, two out of 100 who may pay the insurance and use it because of an accident or because of a death or whatever it is. But other 98% insurance company will make money. In the same way, you always want to collect the credit. Whether you, if you are bearish, you do the bear call spread. If you are bullish, you do the bull put spread. Then you will make 90% of the time you will make profits. Right? So is that making sense? Yeah, you can sell the bull puts at any time, right? For example, tomorrow you see PDD going up, right? Now it is here. You see that stock is going up. You can immediately. You don't need to wait until November 1st, right? These are like a contract. It starts going up. Suddenly it goes to 124, 125. You can, right now you collected $120. You can pay $40, $50, and you can sell it. Sell your bull put spread. You will make 30-40% quickly, right? If it starts moving. But if you wait for more time, you can keep all the credit. If you want to quickly take it out, you will make less profits. But right, the probability is more on your side, right? Instead of taking a risk of buying a call, because market will stay choppy for 60-70% of the time in a range market. Market will be only in a big trend, uptrend or downtrend 30% of the time. So do you want to make money by taking a higher risk, or even though, right, instead of 100% you may make 30%, 40% here, but you will win 9 out of 10 trades. Here you may make 100% on 6 trades, 4 trades you may lose 100%. So which one do you think is a better option? Right, in trading, you do trading to make money. You want to create a second income, you want to have a side income, or even if we lose jobs, you want to have something which will help you for long term. You can do it from anywhere across the globe. You can use it for stocks or options, currencies, India stocks, whatever it is you can do. So you have 90-95% chance to make money when you do the bull put spreads. When you buy the calls, only if it goes up, you'll make money. But here, if it goes up, you'll make money. If it stays choppy, you'll make money. If it goes little bit down, you'll make money. Only when it goes more than expected, that is where only you have a risk. Right? Out of 8 to 9 trades, out of 10 trades, you will make money. Only one trade you may lose, but you are already protecting. You are not just selling a naked put, you are not just selling a naked call. You are always covering your risk with another put, by buying another put or by buying another call, your risk is limited, right? Let us look at some examples for tomorrow, right? Valero. Where is Valero now? What do you think Valero will happen, right? By looking at this, it came all the way down. It did a double bottom. Now it started going up, right? It touched the discount area. You can see that 35,000 buy order, 67,000 buy order, right? All the big companies are ready to buy the stock, right? It started going up. So, right, your trend is completely bullish. Your RSI is completely bullish, right? In all different time frames. So tomorrow, if you do, right, let us say a 130, 134, you sell 135 put, you buy 130 put, right? Or you sell 133 put, you buy 130 put, or you sell 130, you buy 128. Because if it comes here, it will immediately bounce back. The chances of it going below 130 is very, very minimal. You have a huge buy order here. So, what is the chance of success, right? Now it is very bullish. Stock is very bullish. It may go all the way to the top. That means it may go all the way to, this is where you have the liquidity again, right? Price always try to grab the liquidity, right? These are like your magnets. Price always will go there before again coming. So from 132, it may go on there. But if you buy call, it should immediately quickly go there. You will make a lot of money. If you buy a bull put spread, even if it doesn't go there, even if it stays choppy tomorrow or next 2, 3 days, 4 days, 5 days, you are still in a profit. Even if it goes little bit down, you are in a profit. Until it goes below this spread, 128, 130 spread, you are in a profit. Right? So Valero is looking very good for bull put spread. XOM. And also how much investment you need? You need minimal investment because you are buying something, you are selling something. So you don't need lot of investment. When you only do a sell, you need lot of money. When you do a buy and sell, so now XOM, right? Another oil and gas company, 337,000, right? Big companies are doing lot of buy orders. Everything is green. Everything is green. So there is very high possibility for XOM to go all the way to $122. So if you do a bull put spread like, okay, sell 120, 122, buy 120 put. Whenever it comes here, again it will go up because there are a lot of orders which may be unfilled here, right? Because they are putting a limit order. Whenever price comes here, I want to buy. So all the orders will not get filled at one time. Whenever price came here, it touched, it went up. Again, if price comes here, again it will go up, right? Still, there are nearly 60% of orders waiting to be filled. So now if you are selling some 119 put or selling some 121 put, buying a 119 put, your risk is minimal. 90% of the time you will make money, right? Or let us look at Shell. So one thing you see that all of these are in a uptrend. So this one is, yeah, it is already at a premium. If it comes back, right? For example, if Shell comes back to somewhere here, I can do a bull put spread. Let us look at, so I hope you're getting the concept right. You can get the next week expiry. Generally, right, you will get the next week expiry and then you will make profit. So XOM is very good for tomorrow. Then Valero is very good for tomorrow. And then let us look at USO. Right? USO is like your oil and gas. Because you have war tension in Iran and Iraq, always your oil and gas stocks will be very bullish. So it already went so much high, so it is better we wait for a drop before we take it. Then, so for example, right, we have a scanner like this scanner. If it shows something in red, that means there is a high possibility for it to drop further, right? So I am giving some 40, 50 tickers to this, right? That is scanning Apple, Microsoft, Nvidia, Google, Amazon, Meta, all these different stocks. Then that scanner will tell us, okay, Microsoft, it is in the red color. So let me go to Microsoft. So what do you think, right? Microsoft can go to, right? It can easily go to $423. So one way is if you are a high risk trader, you can buy the puts. Or right, because right, it went all the way from the bottom to the top. There are a lot of sell orders. So price started dropping. Your green line became red line. Everything is red here. Everything is red here. That means the trend is bearish. Your RSI, lot of sellers momentum, right? A lot of bearish momentum. So again, it will try to come to this zone before it makes a bounce back. So if you do a bear call spread, right? If you do a put, you may make 60% of the time you may make money. You may make more gains. But if you do a bear call spread now, right? You may sell something like a 435 call, or right, let us say you sell 425 call, you buy 430 call. Your risk is limited, right? Because you have 90% chance it will drop. Everything is telling that it will go down. And now all you want is make the 20%, 30%, right? Even if you do one trade every day, that is good enough, right? If you put $1,000, you will make $300 by end of the day, right? By tomorrow, sometime you may see stock coming close to, right? Even if it stays choppy, also you'll make money, right? That is a good thing. You don't need price to drop. If it drops, that is very good, right? That is the best scenario. You will make a lot of profits with your bear call. If you are close to a premium zone, if your RSI trend is bearish, you do a bear call spread. If you are close to the bottom, if your RSI, if your trend is looking bullish, you will do a bull put spread. Right? So tomorrow, if you do 420 for sell for 425 call and buy 430 call, you will make 20-30% profit on your investment. Right? Let us go to Nvidia. So what do you think Nvidia can come till? Right? Where do you think Nvidia possibly can drop? Right? Approximately it may come around 138. So if you sell a call, right, you sell 138 call, you buy 142 or 143 call, you have 90% chance to make money, right? It may drop even until here, but you don't want to take a lot of risk. You sell only, you get your profits before this hitting this level. You will make nice money, right? So all you are doing is see which stocks are close to the premium. Your trend is bearish, your RSI is bearish, just 1 minute because there was a lot of drop. It is small pullback, but tomorrow you may see it until 138 or less than that. In the same way, let us go to Walmart. It went all the way up. Now it is dropping. Right, 93,000 sell order went to the premium zone. Your trend is completely bearish. Your RSI is completely red. It may go all the way down, right? There are only small buy orders here. So price may come all the way to the bottom. So if you do a bear call spread here, right, what is the possibility you will make money? If you make $200 on Nvidia, 200 on AMD, 200 on Walmart, right? Let us look at some example, right? I gave another 40, 50 tickers with this scanner. Adobe, MACD, PDD, Shell, different examples. So PDD is, right? If you see something in green or blue, that means they can go up. If you see something in red, that means they may go further down. So let's go to WFC. It went all the way to the top. Right, it is 64.5. Tomorrow it may come all the way to $64. So not a lot of gap. So you can ignore it. Right. If there is a big gap, you can make more money. If there is less gap, you may not. So already we saw PDD. It came all the way to the bottom. This also came all the way to the bottom, started going up. So there is a high possibility for it to either stay choppy or go up until $130. So tomorrow, whenever these start turn green, then I can do a bull put spread on PDD. Right? Let us look at GE. It came all the way to the bottom. Now it is in a consolidation zone. The buyers are trying to take it up, sellers are trying to bring it down. So if I buy a bull put spread, there is again when these start turn to green, then I can buy a bull put spread because it is at the bottom. In the same way at so if something is at the top or if something is at the bottom, they are the best ones. Right? But this one already went up to some middle, again trying to go down. So yeah, again it is right. It may do a double bottom and then again start going up. There is a 14,000, 15,000 buy order here. All these are green, but these are not. So if you have everything green here, everything green here, and it is close to a discount, then they are the best ones for bull put. If everything is red here, everything is red here, if that is close to the top, right? So that's what I told you, right? Valero. So you will make nice profits on this tomorrow. So everything is green. Everything is green. That means already the trend got reversed from bearish to bullish. So very high possibility, 90-95% chance we'll make money on this tomorrow morning. So, so whenever your scanner shows something, you see that okay, right? Is it green, green? Here it is green. Here it is green. Here I have a buy order. It is close to a discount. This is at the bottom. So that's it, right? Tomorrow, if I get some 100 contracts, I'll make some $5,000 on this. Right? Let us look at Accenture. It came all the way to the bottom. Right? From here, it came all the way to the bottom. It is consolidating here. You have some 9,000. So the trend did not get reversed yet, right? There is a high possibility it may go a little bit down and then start moving up. So when these turn green, these 135 turn green, then I can do a bull put. As of now, still it is bearish. Right? I'll wait for some more time. Once I see that trend is reversing, I can do a bull put spread on this. Whenever you at a top, you see things are red, you do a bear call. Whenever you are at a bottom, you do a bull put. That's it, right? For example, let us look at DJT. Yeah. So, right on Friday, we had nearly 520,000 buy order. It went all the way up from $34 to $39, right? If we see, but as of now, we don't see any major sell orders, right? Until you see sell order, until you see these red, you don't take a bear call, right? It doesn't mean immediately it is premium. Let me, because it may go a little more further. As of now, still again, Trump is campaigns are working good. So again, people are confident Trump may come to become president. That's why the stock is moving up so much. So we should always look for, one is you have to be at a premium zone, and also you should see a big sell order block. These things should be red if you want to do a bull put. If you want to do a bear call, these things these things should be red. You should see a sell order block. If you want to do a bull put, these things should be green and you should be close to the discount, right? Then you will make nice money. So yeah, that's it. So if we follow that, let us look at SMH, right, which is like an ETF. So it went all the way from bottom to top. So there is a high possibility for a drop. So now it is at the top. Your 3, 5 became red. Your 1, 3, 5, 10, 15, 30, everything became red. This line became red. This line became red. That means very high possibility for SMH to drop till 248, or it may come all the way to 246. So if you do a bear call spread, we'll make nice profits. SOXL, it went all the way from bottom to the top. So there is a high possibility for a drop, right? It went all the way to the top, dropping. You have 1.4 million, 315,000, everything is red, everything is red. So tomorrow we will see in the Nvidia, all the stocks dropping. So SOXL is the ETF for all the semiconductor stocks. So you will see SOXL coming to 33.5 before again it may, right? Or it may drop further to 32.5 and then bounce back. So if you do a bear call spread, you'll make nice profits, right? So all is just scanner will tell you, just go and see, okay, is this red, this red, is it close to a premium? Then is this close to the top? Do a bear call. If it is close to the bottom, this is green, do a bull put. 90% of the time you will make profits without by taking a very, very low risk. Your risk is limited because you have a hedge already, you have an insurance. So that is how you can consistently make profits with by taking very, very low risk. That is the advantage, right? You can create that second income. And you can do with India stocks, US stocks, or you can do with the futures, you can do with currencies, whatever you want, it is the same strategy. Right, I gave you so many examples. Tomorrow I'll share, right? You will get confidence that yes, right, whatever I discussed today, all the chip stocks, SOXL, SMH will go down. All the oil stocks, Valero, XOM, all those things will go up, right? You are you are taking a low risk and you can make profits. That is what. So as I told, right, for example, SOXL, when do you want to close the spread? Right, tomorrow if I am doing a bear call, when do you think is a good time to close it? By looking at the chart, you can tell. Where do you think the price can go? Right, approximately 33.5, 33.6. Right, price will drop, 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 drop. Whenever it is close to this, you can just do the reversal. Right, you will have your vertical spread. You collected $125 or $130, 140, 150, 200, whatever is it. You can just reverse the trade. Then you will close it, right? You will buy back at 40 or $45. That means that $80 for each contract is your profit. You are collecting 125 credit on each contract. If you whenever it goes down or whenever it goes to a $40 value, $30 value, you will close it. So you basically look at, okay, now it may reverse. So let me close my trade. In case if it drops further, right? Let us say, then you can open again and again it will come all the way till here. Nor right again you don't want to. If you make 30-40% in a few minutes, that is good enough. You don't want to wait for it to break the support, come all the way here. You have so many stocks, so many, right? There are, right? Every, okay, now waste management is looking bullish. Or still some more possibility for a drop. It may come here and then start moving up. So whenever it comes to this point, I can do a bull put spread. As of now, still this is red. These are red. I can wait for some more time. Right? But as of now, it is at the bottom. Maybe tomorrow, after 1 hour, 2 hours, it will touch this and then start moving up. Whenever it starts moving up, whenever this turn to green, this turn to green, I can take a bull put spread. Again, it will go all the way to $210. So again, you can buy the stocks if you want. You can buy, right? If SOXL comes to $33, you buy the stock, right? You buy 50 stocks. If it goes little bit down, you buy another 50 stocks. Then they will again go up to 35 or 36. You sell them like that, right? You can be a stocks buyer, you can be a bull put or options. You can, if you are a high risk trader, you can do calls when it is close to the bottom. You can do puts. But if you want to take low risk and make 80-90% of the time you want to make profits, you do bull puts and bear calls. Whenever you are close to the bottom, do bull put. Whenever you are close to the top with a big sell order block, you do bear call. Close to the bottom with a good, right? The same way futures, right? If I want to buy some futures, or wait, on Friday we did short ES or NQ. Why we shorted ES and NQ? We saw that there is a huge sell order block, 86,000 sell order block. It went all the way to the top. We shorted ES, right? We did a QQQ bear call spreads. It went all the way to the top, right? It went all the way to the top, started dropping. You can see 86,000 sell order block. It is at a premium zone. You just short NQ, you will make $500,000 profit. Right? Everything turned red, everything turned red. So tomorrow we may see more drop until minimum 20,000, or today evening we may see further drop until 20,368. If it also breaks that level, it may come all the way to 20,080. Right? If the war continues, we may see further drop. It may come all the way here before again it goes up. Or if the war stops, maybe it will come another 100 point or another 100 points down this evening and then start moving up. So as of now, your 1 hour is at the top, right? 1 hour at the bottom started moving, right? It became green, 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 went all the way to the top. Now it is at the top, it started dropping, it will drop, drop, drop. Maybe it may come all the way to the bottom. So whenever you see NQ is dropping, you can also do QTQQ bear call spreads. You can do QQQ bear call spreads. You can buy SQQ calls. Right? SQQ will keep going up. It came all the way to the bottom. Now it will go up. You can buy SQQ stock, right? Or you can buy SQQ bull put spread. It may go all the way to 7.5 again. So that's it. So if you use a proper approach, proper strategy, 90% of the time you will make profits. If you're just trading because one of your friend told you something, or because you saw somewhere on Twitter, somewhere in the TikTok, you may buy somewhere at the top. You may think Tesla will go to 300, Nvidia will go to the 500. You may buy somewhere at the top price, right? You want to always follow the big companies. When they are buying, you want to buy with them. When they are selling, you want to sell with them. So tomorrow SQQ will go up all the way. So Meta is also looking bearish as of now. So we had a 176,000 sell order block. Went all the way. Again, it may come all the way to 561 before it bouncing back. As of now, it is completely red. So it will come here, touch it, and then start moving up. Right, it came to the bottom, went all the way. There was a big sell order block. Then yeah, it is dropping. So tomorrow we may see further drop. So if NQ is in a bearish, that means majority of your Nvidia or right. Let us also look at Tesla. Tesla, right, from the bottom it went all the way to the top. Now there is a high possibility for a so now we are at the top. You see 3.79 million sell order block. Right? All these are slowly turning to red. All these are red. So tomorrow morning, if I do a bear call spread, it may come all the way to minimum 255. Right? If you buy a put, but if it stays choppy, you are at a risk. But if you do a bear call spread, you sell some 275 put and you buy 270 put, you will make profit 90% of the time. Right? Because NQ is bearish, all your big company, big stocks will be bearish. Your Meta, Tesla, Nvidia, AMD, SOXL, all these are bearish for tomorrow. All your oil and gas stocks are bullish. So yeah, if you follow them, then FSLR. So by looking at the chart, you can tell right where it can go, up to what point FSLR can go. Right, it already started from the bottom, nearly close to the top. Right, it may go all the way to 204. But why do you want to take something, right, little risky, right? This is looking bullish, this is looking bearish. So you don't have a proper confidence, right? When you look at Tesla, Nvidia, AMD, everything is red. If you look at Valero, Xom, everything is green. Just wait, right? Out of 2,000, 3,000 stocks, you don't want to buy something which is one indicator is telling bullish, one indicator is telling bearish. You don't right, ignore those tickers. When something is telling that, okay, this is completely green, this is completely green, this is green, this is green, it came to the discount, a lot of buy orders, lot of buy orders. There is very high chance, right? Even though you have small sell orders, so it may break that. It may go all the way to 137. So you can buy the stock, you can buy the bull put spreads. You will make 95% of the time, you will make nice profits, right? So that's it. So look for such where you have a high confidence, You can easily feel confident that okay, my trend is bullish, my RSI is completely bullish. I came to the discount zone, started moving. My this indicator is giving me green line. This came all the way to the bottom. This is telling me it will go up. So now very, very minimal chance for you to lose. 95% you will make profit. If you buy the stocks, you will make profit. If you do a bull put spread, you will make profit. Even if you buy call also, you'll make profit, but with little risk, right? Maybe if you buy calls, you have 70% chance to make profit. If you buy bull put spreads, you have 95% chance to make profit. It is up to you, right? If you are a high risk trader, you can buy 135 call, 132 call. Then if it goes up tomorrow morning, you'll make nice, right? If you are a low risk trader or a moderate risk trader, you don't want to make 100 to 100%, you are happy with 30%, 40%, and you don't want to lose, then you do a bull put spread, you will make profits. So yeah, definitely Valero exam, best opportunity for bull put spreads, right? It came to the bottom, it started moving up. This started, the price is above this line. There is a big buy order block. Everything is green. Everything is green. So it may go all the way to 121.5. Then Nvidia, AMD. Let us look at QCOM. Everything is red. Everything is red. That means where QCOM can come tomorrow. Where do you think QCOM can come? Yeah, minimum 168. Right. If it drops further, it may come all the way to 164 also. But your minimum is 168. So if the price is 170, what you can do, you do a 172, you sell 172 bull put, you buy 168 bull put, go two strikes below, see like where you have major sell orders around 173, where you have more buy orders. So you buy this one and you sell this one. So even if it goes above, again it will bring it down because there are a lot of orders which are still unfilled. So you can always do 172, 173. You sell higher strike put. Sorry, you do the right. This is a bear call. If you are bearish, you will do the bear call. So you sell this call 168 call, and you buy 172 or 173 call. You will make nice profits. That's it. All you need is just wait for this. Look at this. Okay, this is big sell order. This went all the way to the top. Everything is red. Everything is red. You will make, right. If you make $300-400 within 1 hour, is that worth it? Right. Your billing rate is $50, $60. If you make $100 by sitting in your home and you have a 90%, 95% confidence with very minimal risk. That's it. All we are doing, looking for such type of opportunities and then take those opportunities and wait with patience. Don't worry suddenly you see a green candle. You don't need to worry because so many indicate, right? This indicator is telling it will drop. This 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 is telling, right? This is where you have liquidity. Even if it goes up, it will drop again because there are so many orders waiting here to be filled. So definitely it will come to 168 point, right? Or you can just trade with IWM or QQQ or SPY or SPX. If SPX, right, we took a bear call spread on SPX on Friday. It went all the way to the top. We saw some $1 million sell order. We took a bear call spread. So, right, it went all the way to this 190.7 million sell order. So if it comes to 57.90, right, around this price, it will come all the way here and then start moving up. Whenever you see that this turning green, this comes to the bottom, then again you can do the bull put spread. So the advantage with indices is people cannot manipulate, right? If somebody want to manipulate Tesla, they can, right? If Elon Musk want to give something about Tesla, he can give some positive news, he can make the stock move up. But when you are doing SPY, right, it went all the way up. Now it is at a bottom or it is close to a. So tomorrow, if it starts moving up, we can do full put spreads. So it is not easy to manipulate SPY, SPX, QQQ indices cannot be manipulated, right? Stock, if Trump talks something negative or Kamala Harris gives some good, right, good promises about election that will do this, will give green card to all Indians, then DJT can suddenly drop 10 points, right? But when you are doing with indices, your risk is minimal, right? Because nobody can give a positive or negative news about SPX or SPY or QQQ, IWM, DIA. Those are combination of when you are doing SPY, you are it is like a combination of 500 companies, right? S&P 500. That means five combination based on how 500 companies are moving, it will move. So you cannot easily manipulate. Somebody cannot call something, right? Unless a war situation, only they will, right? They will impact your SPY or because when there is a war situation or when there is some major bad news, then all the stocks will drop. Then your SPY also will drop. But it is not easy to manipulate. Stocks can be easily manipulated, but your indices, your futures, they cannot be easily manipulated. That's why, right, we are focusing and you don't need to, right? When stocks, you have thousands of stocks. You have to keep looking at so many things. But if you are just watching SPY and QQQ, if QQQ drops, your Nvidia drops, your Amazon drops, your Tesla drops, or your TQQ drops, your SQQ will go up. Your right, your if you are just watching one chart, you can take 10 different trades. Your SPY will go down, your SPX will go down, your UPRO will go down. So many different tickers because you are right. This is like an index, right? This is telling you what is happening in the broader market. If you are looking at Spotify, I don't know whether all the other stocks are moving up or down. But if you are looking at QQQ, you know that okay, overall market is in a downtrend. Overall market may go all the way until 490. We may see further drop and then it may bounce back. Or if it drops, breaks this, then it may come all the way to 486 and then start moving. So if you want to make profits, just to follow QQQ. Whenever it comes to the bottom, right? Especially if you are in 1 hour, if it comes to bottom, you can hold it for 3 4 days or minimum 1 2 days. If it comes to the premium, you do next to Tuesday, next to Wednesday, bear call spread, you can hold for 2 3 days. So you don't need to keep watching. And so that is the reason we mostly taking SPY, QQQ, SPX, so that you don't need to keep looking. There is very less chance for manipulation. And unless there is some earnings and we see some positive, a lot of option flows or something, we generally, right, all we need is to make money, right? Whether you buy Tesla, you buy Nvidia, whatever it is, our objective is to make money in trading. So instead of watching 100 stocks, 200 stocks, you just watch QQQ, you can make money, right? Uh, so why if not 50? So, right, again, if you want to, if you go with a 1 minute chart, there will be a lot of noise. If you go with 5 minutes chart, little bit less noise compared to 1 minute. But if you can always look in 1 hour, if 1 hour is close to premium, now you go to 5 minutes and execute your trades. Right now, only take the sell orders or only do the puts, only do the bear calls because you know that 1 hour is in a negative or in a bearish trend. So you can take the trades in 5 minutes, but for your planning purpose, you will always watch 1 hour. So you know the trend, right? High level trend. Your market is in a bearish trend now. Until this becomes green, until it again starts moving up, It may come all the way here until this point. Your QQQ is in a bearish trend. So now you go to 1 minute or 5 minutes, only execute. Either if you want, you can only do the puts, right? So for example, I'll use my, so now you know that in 1 hour we are in a bearish, right? Or you go to NQ, you know that you are in a bearish trend in 1 hour time frame. Now, if you want to go to 1 minute or 3 minutes or 5 minutes, only whenever you see a sell signal, right? You see a sell signal, take it. Again, it may go a little bit up. Again, will see a sell signal, take it. So only take the sell signals, right? Don't take the buy unless you are an experienced trader. You can quickly scalp. Always go to the 1 hour time frame. Understand what is the overall trend, higher time frame trend. Okay, it went all the way to the top. Now it is showing a red line. That means there is a high chance of drop until minimum 20,280 or minimum until 20,430. So now you take only sell trades. When you see the buy trade, ignore it. You got a buy, but immediately you got a sell. You got a buy, immediately you got a big sell. So only execute that, then you will be successful, right? With you, if you are doing prop firm trading or whatever you are doing, always first go to, before you take a trade in a smaller time frame, go to the higher time frame, see what is the trend, what is the higher time frame trend, and then you execute that in 5 or 3 or 1 minute, whatever you want, you can do it. But right, for example, if I want to do crude oil, so what is the trend, right? Everything is green here. Your background is green here. You got a buy signal. Your line is green here. This line is green here, right? So minimum it may go all the way to 72.36. If it goes above that, it may go much higher until $76, right? If the war continues, it will go all the way to 76. So now you know that, okay, 1 hour crude oil is bullish. Now I'll go to 5 minutes. Whenever I see buy signal, I'll take the trades, right? I got a buy. Background is green. Table is green. Your SMAs are green. Your RSI is green. Your EMS are green. Your line is becoming green. So now you will make $1,000 with one contract from here to here. And if that breaks that line, then it may go all the way to 72.30. If that also breaks that line, it may go further. So you're right, your success is always before you take a trade, go to a higher, right? If you want to trade on 5 minutes, you go to 1 hour. Or you are a swing trader, go to 4 hours, see what is the trend, and then maybe you take your buy and sell on 15 minutes or 30 minutes, right? So this is called as a planning time frame, execution time frame. If you want to, you plan your right, the trend, you understand what is the overall trend of the market by going to a higher time frame. You execute your trades in the lower time frame. You know that it is bullish, right? How do you know? Even your kids can tell that, okay, this is green, this is green, your background is green, it came to the bottom going up, that means it is bullish, right? So now only focus, right? If you get a sell, immediately it will become buy. So don't take the sell trades, right? Very high chance until you are at a major resistance or you see a big sell order block, don't take any sell or just avoid the sell until you see this becoming red. You don't take any sell signals whenever you are in a buy. So today evening we may see it. If right, there is a high possibility it may break this resistance and go up. So that's why your Valero, XOM, all the oil stocks are very bullish. So that means your crude oil also can break the resistance, can go to much higher because of the war scenario in Iran and Iraq. So that's what, right? That is how you can make consistent profits with your prop firm trading also, where if you read what is going on higher time frame, you follow that in your lower time frames. Right? Because indices cannot be manipulated, right? Indices is not one stock, it is an ETF, combination of 100 stocks, combination of 500 stocks. So that's why you cannot manipulate them. Then, so regarding, what's the question? Yeah. Best oil stocks, as I told you, Valero, Exxon, they are the best ones for now. Again, there are a lot of oil stocks. Uh, so, what do you think will happen to Oxy tomorrow? Right? If we'd have caught it when it came here, we'd have already made nice profits. But so, where do you think Oxy can go tomorrow? So, minimum it will go to 52.6. So, you can buy stocks, you can do bull put spread, you can buy calls. So, it is in the uptrend. It will go all the way to the top. Again, it will touch this, and then again it will drop. It already went to the top, so we can ignore it. This can go all the way to 25.75 tomorrow. So you see, there is 99,000 buy order. Everything is bullish. 3 5 is bullish. Tomorrow morning 10:15 also will become bullish. So until where it can go all the way to 25.3. So you can buy stocks. You can make, right. If you buy some 100 stocks, 500 stocks, you'll make some 100 $200 easily. Slumber 232,000, 1.8, 1,000. It will go all the way to 42.86. Everything is green. Everything is green. So you see, right? It came to the bottom. It is bullish. We go all the way to the top. So now, even before market opens, right? You can create a list. everything green, green, green. Minimum it will go until 4.4. So if you buy 1,000 stocks, right, you can put a limit order now itself. Tomorrow morning, by the time market opens or within few minutes, it will go to 4.37. It already moved so much, so little risky. It may go all the way to 28.6, but we don't have much room, so we can ignore that. So like that, even before the day starts, you can look at different stocks and you can identify which one will move. And you do bull put spreads once market opens. By end of the day, you will make nice profits. Right? Tomorrow, if we do bull put spreads on all these ones, if I do bear call spreads on all these ones, I'll make $5,000-6,000. Right? If I do 10 contracts for each one, right? That's it. All we need. Already, I'm doing hundreds of live sessions. All the recordings are there. So you can watch it, right? Because if somebody cannot see the value, uh, so that's what you can wait until tomorrow. You can see that everything will make nice profits. So AMD, and because there is a big sell order here, even if it goes here, again it will drop. So I can buy these calls. I can sell these calls. And if I give 1 2 days, I'll make 30-40% profit. You need very less contract because you are also buying, right? If you just do a sell put or sell call, you need lot of capital. But when you do a buy and sell, you need very minimal capital. So you need very less investment. The snow is also looking bearish. It went all the way to the top. Everything is red. Everything is red. So tomorrow we may see a drop minimum until 114. We may see a drop. But if something is already at the top, that is the best opportunity, right? This is somewhere still close to the discount area. So right, when you have much better opportunities, why you want to go with something where you can only make $1 difference, right? If you look at Nvidia, you have minimum $5-6 drop is possible. So now you have a lot of opportunities. You can see out of this, okay, which one there can be a big drop, and I can buy some 10, 20, 30 contracts and with a low risk, with a 19.85% yeah, I already shown you how to do bull put bear call, right? If you want to do a bull put, you will go here and you can, for example, if I want to do for PDD, let us take PDD example again. I want to sell 122 and I want to buy 119. Then you can go here, click on this, and you can say buy vertical So always you will sell the higher strike and you want to buy the lower strike. I am collecting around $120 for each contract. So you click on confirm and sell. Then it will tell you how much it will, what is the credit, how much investment you need to do that, right? And then you just close the, right, whenever you want, you can just close the transaction, right? Whenever AMD drops or PDD goes up, you can, you make 30%, 40% profit tomorrow or day after tomorrow. You will close and take the gains. When you want to do same thing with AMD, for example, I want to sell for 157 or I want to sell 152.5. So you need always make sure you have a credit. If you want low risk, you just go with one. Or if I think like, yeah, still there is, right? Again, by looking at the chart, by looking at AMD, you know that where there is a reversal possible. That your reversal is possible around $152. That is where again buyers, big companies want to buy. So you go there. So you are selling that call because you are telling them that whatever is the AMD price, you will sell them at 152.5, the stock. And to avoid the risk, you are also buying 157.5. And you are collecting $260 as a credit. So tomorrow, if stock starts dropping and if it drops all the way here, nearly that $260 will become $30, $40. You will buy back at 30 and 40. That means you made 230, 230 on each contract, right? So that is the advantage. You can make 70, 80% profit on that. As your stock keeps dropping, you will make more and more profits. And whenever it comes close to this, you just close the transaction. Right? You will have a spread. Just you can reverse the transaction. That's it. Now you are buying it. You are selling, right? You are doing a buying a vertical spread. Now you will sell the vertical spread. You will buy back. At that time, now you are collecting $260 per contract. At that time, you will pay $40 or $50 and you will buy it back. Right? I hope everyone got it. So basically, yeah, instead of going through slides, I explain you using different examples, right? So 70% of the time, market is always sideways. Option buyers can earn and make money in trending market. Sellers can earn and make money in range bound market. 70% of the time, market is sideways or range bound, where option sellers can make money. But if you just do the sell, you have unlimited risk. That's why it is better to do both option buying and also selling based on the market sentiment. If you are at a bottom, do the bull put spread. If you are at the top, you see a lot of big sell orders. It goes all the way to the top. This is red. This is red. You do the bear call spreads. So you have low risk, high probability of success. You will nicely make every day. You can make 300, 500 based on the account size. If you have a bigger account, you can make 5,000, 10,000 with a low risk. If you have a small account, you may make $100, $200. All you need is to understand the concepts, learn, practice on a paper account. Once you get confidence, you can take trades in your real account. Right? That's it, everyone. Hope if you miss buying back on time, it is not a huge risk, right? As I said, even if it is choppy, you will make money. If it goes up, only if stock goes up, right? If it touches here and if it goes all the way to 170, 180, also you have a hedge, right? You are not just selling a put. You are also buying a, you are selling a put or selling a call. You are also buying a call because you are bearish about AMD. So if it if it comes here and then stays in a consolidation, that means you'll make more profit. If it comes here, if it goes little bit up, still you will be in nice profits. Only if it touches here and goes all the way up very quickly, also you have a hedge. So that's why your risk is limited. Your loss is limited. Right? You don't have a major risk here. You will not lose big money. You always have higher chances of success. Even if you don't close, you don't need to keep watching and wait for it to, right? You can even put a limit order. You can say, you can write while creating a order itself. You can say that whenever this becomes 1.5 or 1.6, the value you want to buy it back. You want to take 40%, you want to buy it back. I'll send the instructions in the options group because I already took a lot of time. But you can automatically do it. You don't need to keep watching the screen. Automatically, it will close the trade, even though you are in meetings or you are somewhere. Whenever it hits that 40% or 50%, it will automatically hit and take the profits. Yeah, that's it, everyone. So I hope, right, it makes sense. And yeah, I'm making 85-90% profit in all the trades. Uh, if you follow and if you right use a systematic approach, you will make money. If you just trade without understanding what you are doing, you lose money in trading. So all we want to do, wait for proper levels and then take the low risk trades. So 90%, 95%, you have success on your side. If you are waiting and you see that AMD is going up or Nvidia is going up, if you are buying at the top, right? That's why 90-95% retail traders lose because they buy at the top and they wait, they sell at the bottom. Whenever price is supposed to, so that's why whenever you sell, price will start going up. Whenever you buy, price will start dropping because we wait. You don't buy Tesla when it is 200, 205, 210, right? When it goes up to 60 to 70, you will buy. Suddenly it will, right? Tomorrow it will start dropping again. That's what market makers know how to take money from the retail traders. They will try to pump it up and then dump it. So that's why, yeah, learning is important. So yeah, again, right? One is you can subscribe to the alerts channels if you just want to take the alerts, right? Where we share, right? Okay, I'm doing this bear call spread, I'm doing this bull put spread. That is one way. Or you want to learn, you can do, right? You can use it for India stocks, you can do for currencies, futures, whatever you want. You can. The logic is same, the strategy is same. You can, if you want to get the indicator, you can go to Ninja underscore Apex underscore bot, and we have a setup section where we'll help all the members to set up the indicators on their trading view screen so they can use it for whatever they want. They can, in the same way, if you want to just to get the alerts, you don't want to use the indicators, we'll also, right, whenever you join, we'll also add you to a channel. We'll tell you which stocks can go up, go down, and also we'll invite you to live sessions. So tomorrow, when I am trading, I'll explain. Okay, because this is at the top, this is at the top, right? I am doing this, or right, because this is close, I'm taking profits, or because NQ already it is in 1 hour, it is at the top, so it will drop. That's why we can do QQQ bear calls, or we can do QQQ puts, or SPX puts, or you can do NQ short, ES short. So you will understand, right? Once you watch for 2-3 days, you will understand that okay, because of this reason we are taking. Then you can become independent. You don't need to depend on anyone for you to take the trades. Even in the night time, you want to, let us say, you want to trade India stocks. Again, you follow the same strategy, right? ITC. So ITC came all the way to the bottom. There is nearly $2.27 million stocks. It came to the bottom. It started moving up. Now, if this turns green, I can buy ITC stocks. It will go all the way to the top, or minimum it may go till $499 or 499 rupees, or Axis Bank. Everything is green. Everything is green. This is green. So Axis Bank can go all the way to 1280. So now it is at 1189 rupees. It can go to 1280 because there are no major resistance or sell orders. Everything is looking very, very bullish. If you see these ones, that means there are a lot of buyers in the market. It came to the discount, started moving up. So you can buy option calls for Axis. You can do bull put spread for Axis Bank. You can buy the stock, whatever you want, right? You can pay alerts premium for India stocks, for India options. You can pay for US stocks, US options, for forex. You can pay for crypto, or you get the indicators, you learn how to use them, and you can become independent. You don't need to depend on anyone, right? You can trade whichever you want, you can trade them, right? If you are busy in the mornings, you can trade India stocks in the evening time. You can trade futures in the evening time. You can trade currencies in the evening time, right? If you have a very busy job between 9 to 3, you don't need to depend on just US stocks or US options. You can do a lot of things. So that's why, right, I suggest learning and then becoming independent. So you are not depending on anyone, right? If I go on a vacation, you should not stop your trading. You should be able to continue making money every day. So if you do a bull put on Axis Bank, what is the risk you have, right? Very, very minimal risk. You will definitely make nice profits. It will go all the way to 1280. So you can go to website. You can go to this website. So if you want to, so you can also do prop firm trading without using your money. You can do futures trading. You can do stocks trading, options trading. You can buy the indicators, trading view indicators, think or swim indicators. If you want to subscribe to options channel, stocks channel, futures channel, forex channel, India options, India stocks, trading training programs. So you have everything on the same page. So whichever you want, you can just, if you want to get a trading view subscription, you can click here. It will show you what is the code. Just copy code, go to store. You can get the charting platform, right? So you have to pay $5, $10 per month for the trade, right? The only to use the trading, right? It is not for our indicators, right? We did the development, coding, all those things for price pulse. So for to lease them, you will click here. But if you want to just get the trading view platform, you'll go there. If you can do, you can use the same logic. You can trade futures on Tradify, fast track trading, Bullnox, right? For the same effort, you can make money from this, from this, from this, because all these companies are paying you to do trades. If you can make profits, they will, all of them will pay. So you can look at the same NQ chart. You can make money. When you see that it is at a premium, you see big sell order block, you short it. It comes to the discount area, it goes, you go long, you see a buy order, or you see crude oil is bullish, you take a long, you make profits from this company, this company, this company. So it is like you are doing the same work, but getting paid by so many companies. That is the advantage, right? That scalability. If you work in your job, even another 20 years, even if you put 20 hours every day, they won't double or triple your salary. But when you take time to learn and you practice and you start making, right, following the rules, then you can make same for same time. You spend only 2 hours every day, 9 to 11 central, or in the night time, 9 p.m. to 11 if you're doing India stocks. That's it. You are putting only 1 2 hours. You will make much more than what you are. Only thing is you need to take time to understand the concepts, practice, and then you can follow. Yeah, okay, are you not seeing? Uh, yeah, this is the website. Linktree. The indicator session is at 4 p.m. today. At 4 o'clock, we'll do. So if you want to use multiple indicators, right, we have some indicators for swing trading. Some indicators are for scalping. Some indicators will tell you, right, which stocks can go up, which stocks can go down. So if you want multiple, or you can just use price pulse and this only two indicators, you can make money. Then you can use a free trading view plan. You don't need to get any. But if you want more success or you want to do scalping, you may want to do swing, you may want to look at confluence from different indicators, then you can get a subscription from it. Especially for Thanksgiving, they will give nearly 80% discount. You can get a free trial for 1 month. Next month, at this time, they will give 80% on the annual plan. At that time, you can get a annual plan at very cheap price. Right, for Thanksgiving, TradingView will give very nice discounts. Yeah, whenever those companies will pay nearly 90%, whatever profits you make, they will give you 90% profit. They will take 10%, they will give you 90%. You whenever you subscribe, you will be part of a Telegram channel where I'll post the links, all the right, all the Zoom links, everything for the live sessions every day. So 1 or 2 days, you will get back your money, whatever you kept for the indicators. Yeah, that's it, everyone. Talk to you during the setup session today. Have a nice rest of the day.